Hi, Clayton. This is Don Elliott. I got one question about your one of your podcasts. You were talking about HELOCs. I was wondering if I can use my HELOC to pay off some of the homes that I have leveraged. As you know, I used Fund and Grow with the 18-month 0% financing, and it's coming to an end pretty soon. Instead of me doing a cash refi, I was wondering if I can just use my HELOC. Also, I wanted to know if I could use the HELOC um, as business versus personal, so I can keep my personal income to myself and just use my rental income to pay off my HELOC. I know you had talked about commingling, and that word kind of scares me. I just don't want to get in trouble. Look forward to listening to you and with your advice. Appreciate it. Bye.
Thank you, Don, for the question. So, again, I'm not a financial advisor or a tax accountant, so definitely talk with your tax accountant on some of those particular issues. But I will say that you can use a HELOC for anything, and think of it. I mean, people mortgage their homes all the time in order to keep their business afloat. So that's not illegal from my understanding. I mean, you can absolutely use a home equity line of credit to do whatever. You could buy computers for your business. It doesn't matter where the funding is coming from, as long as it's being captured correctly and reported to the IRS in the form of, for business purposes. But again, talk with your CPA about that. You shouldn't have any problems using that. People will use equity in their homes in order to start a business all the time, or to use it for business expenses. So that shouldn't be any kind of an issue. Think of it just like getting a loan from your father, right? All right, son, here you go. Here's a business loan for you to get started with your business. It doesn't matter that it's a loan to you from your father. It doesn't really matter. It just matters how you're paying for things and capturing expenses for taxes. So that piece of it aside, as far as using a home equity line of credit in order to pay down debt, absolutely. I've written a whole book on it. So it's called How to Pay Off Your Mortgage in 5 Years. The subtitle is really how to use your home equity line of credit to this advantage. Because when you understand a home equity line of credit, you're understanding that it's different than a normal mortgage. And basically, your two biggest enemies when it comes to mortgages is time and interest. And so the difference with a 30-year amortization mortgage is that you have that clock, you have that 30 years. And so you're paying, if you got a $200,000 house, you're likely paying $500,000 for the house in total at the end of that cycle, or even more, depending on your interest rate. So, but if you can slaughter that timeline by using a home equity line of credit, and the way that we talk about it in the book is you can take, let's say you've got a $30,000 HELOC from your equity in your home. Well, why not take that HELOC and take 20 or 30,000 of it and throw it at the primary balances of your debt? And so what I teach you in the book is taking that home equity line of credit, whether it's 20, 30,000, and then firing that at the principal balance of your main mortgage. And when you do that, you're cutting the time down significantly on your amortization schedule. That's the beauty of it. And they're two different financial products. So you're using one financial product to slaughter another financial product at the end of the day, is what it's about. The beauty of the home equity line of credit as a weapon is that, you start with a zero balance and you can use as much as you want. So you can rinse and repeat. You could take 10,000 of that and fire it right at the principal balance. Now you've got a $10,000 debt, right, on the HELOC. And then you pay it back out of your salary or whatever. It goes to 8,000. Now it's at 7,000. Now it goes all the way down to zero. And then once again, you take another $10,000 check and you fire it at you fire it at your primary mortgage or your rental mortgages, whatever they happen to be, and fire it at those debt pieces. But I want you to weigh all of these things, Don, because you might find that money is so cheap right now that if you're getting a 3% mortgage or you've got a 4% mortgage on these rental properties, who cares? It's free money. So you've got an appreciating asset that's performing better than the interest rate. It's a hedge against inflation, right? So if inflation's at 2%, it's about to go up. Inflation is starting to run hot, and the Fed is going to begin to taper down on its program, and on Wall Street, and inflation goes up. Your house is still performing well above inflation. That's why I love real estate. Your cash flow is coming in consistently. Your tenants are well taken care of. They're paying their rent on a regular basis. And they are providing you equity every month. They're paying your mortgage for you. So that's how you get this incredible internal rate of return, because you're using the bank's money. You have a tenant paying and building equity for you. You might even consider saying, you know what, I want to take that HELOC and buy another rental property. Forget paying down that debt right now. Who cares about the debt? Eventually it'll be paid off by the tenants. You can add another asset to your portfolio. So all of these things to consider. I like to say, hey, we used our HELOC for both. We bought assets with it, and the 50% of it we put towards debt. So kind of it depends on how much of a home equity line of credit you actually have to work with. Anyway, Don, thank you for subscribing to the show. And I think I see you, Don, on our live show all the time. Pop it in there. So thanks, Don, for being a great part of our audience daily over on our Morning Invest live show as well. Thank you so much. Again, if you would like to leave me a voicemail question, please do. Go to morrisinvest.com/Clayton. And don't forget, become a part of our newsletter because we are going to have our webinar, and I'm very excited for it. And I want you to be there with us on our webinar. Again, we'll have a link in the show description and show notes down here. But just go to morrisinvest.com/newsletter to make sure you are on our newsletter. And we will be telling you through that email all about the webinar that's upcoming. So thank you, everyone. Now go out there, take action, become a real estate investor. I believe it's the #1 way to build wealth and store wealth for your family. We'll see you next time.